Welcome back to Point Blank. We're on the topic of the rejection of the US bailout plan and the subsequent jolt we felt in the global stock markets today. Well, before we continue, let's just take quick web comments. Red Devil 72 says, ask if property prices fall here, will we be in the same mess as the Americans? Well, it all sparked up from a crash in property markets there. And James thinks it's a good point. All the US mess started from the subprime rate crisis and property market busts. Will this happen in Singapore? HDB prices are more or less controlled, like what Chris has said. But, private property value is entirely at the mercy of the market. So, do you think that it's true that we'll end up in the same mess as the Americans?
I don't think it'll be such a big mess. I say this because the purchases that I bought properties, like I said, in the last few years, had not gone with very large loans. Some of them even without any loans. We also had a group of people, who were fortunate enough to have their developments go en bloc. Okay, so they started purchasing properties also all in cash. So as long as they buy fully in cash and they didn't take much loans, so should property prices even come down, it doesn't affect them much. They have the holding power to hold that property, and then what they'll do is they'll sit through the cycle again and wait for property prices to go up again.
So you don't get a kind of irresponsibly lending. It's why we had started with a subprime mess, loans given to people who don't have a proper job or a job which gives you constant income. So we don't have that situation here. After the Asian financial crisis, I think the bank are a lot more prudent. Much more than before in terms of who they lend to. So you're unlikely to see the kind of mess
as the last financial crisis.
In fact, contrary to that, they are more cash rich and buying with more cash than just taking loans.
I mean, we must praise the government too. They have been watching the markets. You've noticed how they've controlled the, what you call MES, all this steps in, and they will spell out what's the maximum financing limit. Because we've learned from the last crisis that if you keep the financing limit so high, the moment the property prices come down, people will end up with larger loans than the value of the property. And that's when panic sets in. But this time around, you can see even for HDB flats, for people who are taking loans from the banks, they are now forced to come out with cash as much as 5%. So in this way, you've already got that buffer of 5% should prices fall. You don't end up negative.
Okay. Well, some more comments from the web. Black Kitten is asking, well, all these discussions sound so foreign to me, and if it touch me, I'd rather invest in a cookie tin.
Big one. Keep your cash in to buy that
big
property,
wets of cash to buy that private property with. Well, Apple Touch Me says, you could donate some to me. It's a good time to buy property, though, if you have the money. Well, that's Apple Touch Me's advice. Blake 101 says, my in-laws are bugging me to get hitched and get a new place. So, is it a good time to get a new place then? Well, another good excuse to steer clear of a wedding. Alright, I don't know if it's a good excuse. We won't be the ones providing the excuse for you. But we're wondering too, are folks in the heartlands worried by today's jokes? Well, let's just find out.
Yes.
Do you invest in stocks?
Yes, I invest some.
So what are you going to do with your stocks now?
I hold on.
Hold on to You don't think it will affect you in any way?
My daily living will be still in order. So I'm going to hold on until the day it come up again.
Okay. So do you invest in any stocks?
No, I have no investment in stock.
You haven't made any investment. Do you think this will affect jobs or the economy in general?
Probably a bit because of bank and financial system will be affected with it.
Do you think it will last or it will pick up again?
Well, I don't know. It's probably about 6 months at least,
So you think the economy will be bad for a while?
Not for Singapore, I think. Probably for the United States and Europe.
Do you invest in stocks?
Yes.
So if the market...
How is it crash?
Sorry?
How is it crash?
Because the American market crashed last night.
Does it affect Singapore?
Yes, it's affected Singapore. The market has crashed this morning.
What time was it?
Sorry?
I was checking the stock and there's nothing.
Don't know anything about it. What are you going to...
I haven't checked yet because I was just doing shopping around.
So...
Yeah.
So what are you going to do with your investments?
Well, hold on to it, that's all. Yeah.
You think there's...
I think Singapore maybe we have to hold on to it, that's it. Yeah.
Do you think this will affect your job or your...
See how it goes. Yeah. I don't play with stock, but I just invest. But if it doesn't affect that much, I hope.
Okay.
Let's see how it goes.
Okay. You don't invest in stocks?
No, I do not.
Okay, thank you.
股票市场虽然是 crash 啦，但是人们也是要吃的嘛，我的生意不会受到影响的。
Do you think it's more of a complacent attitude, or you think it's actually a wise thing to just hold?
Yeah, well, I mean, you look at the market, Singapore market has fallen by over 30% year to date. If you take it a 1 year view, many stocks would have fallen by between 70 or in some extents, 80%. You're a bit silly to sell now. You haven't sold before. In essence, what you can really do is, if you are holding relatively blue chip stocks, you're not likely to see the economy go under and those blue chips fall. So I would basically look at it more long term and say, okay, down, do I still have the resources perhaps to buy cheap stocks at this moment? Because if I have, say, Singapore Airlines or DBS, we know they won't fall. So in essence, if they are attractive at this level, perhaps I nibble a little bit, 1 or 2 lot at this point. If it come down further, buy some more again, and essentially hold for the recovery, because economy go through cycle and so will stocks. So in essence, after this downturn, there will be a strong recovery. We don't know how long this downturn may be, but certainly they will not become worthless. It's
so
more
it kind
important.
of works like property, like how some people wait for prices to drop and they buy, so it's the same thing.
Yeah, same principle, buy low, sell high, but it's very hard to do when you're at the moment and thinking with your heart rather than with your head.
So what kind of advice would you give potential investors or people looking out for a good deal?
Well, basically, it's, for instance, coming back to the bank again, look at what it did in the worst of crisis, Asian financial crisis. At that point, that should be a reference point. Well, at that point, with comparison we do for banks, for instance, price to book, how much is it worth at that point? It was worth, less than what it was, they would call it price to book ratio of less than 1. Currently, it's about 1.2, 1.3. So it's somewhere near there already. If the crisis were to deepen, prices were to fall, and the price to book ratio dipped down below 1, I would say close an eye, take it, and then hold it. Perhaps you may have a big wedding feast, and a big flat to throw in for free as well subsequently. So that's kind of mentality we should have at this juncture. That stocks have come down, but if you're holding stocks which are going to be around longer than you are going to be, then why not? Think of it long term rather than short term. Same with properties as well. Same principle for all asset.
Oh, we've got a good question for both of you on the web. Red Devil 72 is asking, seriously, where should I put my money? Inflation is eating up my fixed deposits and savings. Unit trust shares all down. Too much risk in commodities. Prices are still high. So how? Either way, I'm just getting poorer by the day and by the minute.
Not true. I think the good news is that I think inflationary worry is now subsiding. Oil prices coming down. Once you have threat of global slowdown and global recession, demand cools off. Prices will fall, as we are seeing now. That's the good news in that, although we are seeing the lag effect of inflation coming through, you know that your electricity bill will cost more this coming quarter. But rest assured, next bill you see next quarter will be significantly lower. If you still have a job, that's still fine. So, going forward, you are looking at likelihood of lower inflation rather than higher inflation. In this kind of environment, if you are risk adverse, I would probably say that if banks are still offering attractive deposits, temporary for 3 months, put them in the bank. FD rates, I think banks are still offering a quite attractive level. Why? Because banks are risk adverse. They want to collect as much money as possible in case things doesn't quite work out. So give them the money, keep them there. They're offering you good returns. So when you see that there are buying opportunity out there, then take the money. Certainly for now, I would say make full use of the empty Milo tin.
Okay. Besides the Milo tin, there are other places we can park. For example,
like under the bed in your apartment.
in various sizes boxes. But besides the boxes, under our beds, which we all are very tempted to put our money in, it seems safe. But is property safe? Is it the best way to hedge off, inflation or just today's jolts, for example?
Well, if you have a deep pocket, then why not? Like every property cycle, you will see ups and downs. Idealistically, is to buy it when the cycle is at the lowest, and then to sell it when the cycle is highest. But who's to know when it's lowest? Looking at history, we have seen that whenever there's a crisis, both regionally or globally, it causes property prices to come down. If the timing is right and you pick it up, ride that cycle, as you see the prices pick up again, and that's when you cash in. So, but one must have the money to buy, I must admit. So it may be a good time to buy, actually, especially in the private property market, because this is the time where you will see prices not going up, maybe dipping a little, and then that's where you can buy and then just wait and ride it.
But only if you have deep pockets and if you're cash rich, right?
Yes, that's right.
So break up the piggy bank.
It's okay, bring a piggy bank to a sort of a local bank, because there's still worries about foreign bank at this point, which is why you see what the current environment is. Many people who had money in the foreign bank, although they may be perfectly sound, they are not quite sure whether they could be the next bank that may go in the environment of worsening crisis. So more of them are moving the banks to local or their funds to the local banks, and which is why I think at this juncture, perhaps you're risk adverse, you have money. Okay, keep them in a fixed deposit with a local bank, and that perhaps you can sleep better in the next coming few days.
Thank you.
Well, that's a bit of advice for you and for me as well, for the jolts that we have experienced today. But we're running out of time, so that's all we have for today. Thank you so much, both of you, for coming on our show.
Pleasure.
Yeah. But before we go, here's our reservism for today. A gentle reminder from U.S. Treasury Secretary Henry Paulson. There is much work to do, and this is much too important to fail. Well, bye and good night.